We're looking at investment themes that you should be able to rely on, regardless of what the Fed is doing. Really, we're looking at what you can own, regardless of what the market is doing. Investing, as opposed to trading, is really about identifying themes that will play out over a long period of time that you can take advantage of over short term by trading around a core position. So let's say you buy a stock at $32 and it goes up to $42. That's about 30% rate of return. You probably want to take, say, 25% of your position off the table. By the time you get to 48, you're talking about a 50% increase, and you probably want to have cashed in 50% of your position. Pending that nothing about the fundamental story has changed, if the stock takes a nasty tumble, say from 48 to 40, you want to add to your position. The market will give you ups and downs. You have to force yourself to sell when you're up big, and you may even have to force yourself to buy when prices are ultra cheap again. We did a great job navigating your way through owning seed. That's Origin Agritech, the Chinese company that has a genetically modified seed which received approval to do business in China. The stock shot up from under $10 to $15 and told you straight up that above 13 or 14 you wanted to sell it all if you were trading and take some off if you're investing. The stock now sits firmly below $10, around $9.20. We think now the investment begins. Most of the hot money should be out of the stock, and only those who want to be in for actual growth of the company should be left. If you didn't take some off the table above $13, then you made a round trip. You saw big profits, and then you watched them disappear. What you have to do now is to load up on the name here below $10. Still not more than 5 to 7% of your portfolio, though, and then start selling it off again around $12 until you only have your gains left on the table past 15. You don't have to be a trader to manage a position you own longer term. You just have to not be asleep at the wheel. Consider setting limit orders right when you buy the stock. You can set them all the way up, but then when the stock hits your price target on the way up, you can set limit orders to buy it back on the way down. Then you let your thesis play out and you remove much of the emotion from trading. Now, let's get to the theme we mentioned at the beginning of the show. This morning at the office, we had a conversation about trash. No, we're not talking about low-dollar stocks. We're talking about stuff you throw away or recycle. Of course, waste management came up in the conversation, and the question was posed, is there even another name in trash pickup and removal that actually matters? Someone mentioned Republic Waste Services, so we'll bring that conversation via the numbers, and then we'll decide. First, we think the story is quite clear for why someone would want to own a company that does waste management. Population all over the world is growing, and we don't think it'll stop anytime soon. Also, at the Thomas Friedman lecture last Wednesday at the Wake Forest Energy Conference, he talked about the world having too many Americans. What the heck does that mean? For Friedman, there are too many people living like Americans do, consuming more and more each year that we have to worry about things like energy and garbage. He showed us a picture of children in Africa doing their homework under street lamps at night, because they didn't have the infrastructure to be able to do things like this at home under their own electricity. We already laid out the story yesterday for needing more energy infrastructure, as well as finding it, processing it, and delivering it, and powering it. Let's take a look at waste management first. So, what's kept us from talking about this name before? The company has $612 million in cash, but $8.25 billion in debt. That is levered 13.5 to 1. When we see those kind of numbers on a balance sheet, we look the other way, which is what we have done up until now. The problem is that the issue of waste management itself isn't going away. That means that someone will be the industry leader, and the theme can be played for years and years to come as more Americans throw more trash away every year, year after year. So what are we missing all this time? Cash flow. Cash flow numbers tell us how much is coming in for the company to run its business. Waste management takes in $2.32 billion in operating cash flow every year. Net of its debt, you're still looking at $971 million a year in free cash flow. That's nearly $1 billion in free cash flow. That's why the $1.25 in cash on the balance sheet shouldn't bother us. They can actually pay the dividend of $1.16 because they only have a float of 455.4 million shares. We multiply those two numbers, shares that are trading times the dividend, and we see that they only pay out $528.3 million in dividends. They have $971.63 million in free cash flow. That's what gets us the payout ratio, or close to it, that we see of 63%. We actually see a payout ratio of 54% but that's with the Yahoo Finance numbers. So the bottom line on the company is that the dividend looks pretty darn safe from the cash flow analysis. So their forward PE is only 13.82, while current PE is 18. This means that we might realistically set a price target for the stock at $42 a share, which is $10 higher from here. That's the case for Waste Management, so let's take a look at Republic. The company has $107 million in cash and $7.06 billion. That, my friends, is 1 to 65.8 leverage. The company has operating and free cash flow of $1 billion. But we'll have to look into why those numbers are the same, as the company clearly has a massive debt load. The dividend for the public is only 2.8% compared to Waste Management's 3.5% dividend. Republic trades at a 29 PE versus 18 for Waste Management, although the forward PE is nearly identical to that of Waste Management at 13.79. Seriously, it's 0.02 away from the same identical forward PE. If Republic is able to command a higher multiple, say 20, versus the current 28, the Republic could trade at $40 a share, which is $12 higher than Waste Management. You may ask why the higher valuation for Republic. It comes down to growth. Republic has a PEG ratio of 1.03, which means that you're only paying just over 1 times growth rate. Pretty darn cheap for a company that has 35.9% earnings growth year over year and 148% gain in revenue growth year over year. This is why Republic has a higher PE, because it has real growth. Both quarterly earnings and revenue are down double-digit percentages for Waste Management, and their PEG is 1.8. There's very little room in the PEG before this trades above 2 times growth. That's the magic number by where Jim Cramer starts to get nervous. After the analysis, maybe you want to own both. It looks like Republic is actually taking share in the segment. They're certainly growing, which means that they have to be taking share from someone. Their balance sheet is a very scary place, especially compared to Waste Management, but people are willing to put a higher multiple on the stock because of its growth. If it earns the $2 that analysts are projecting, then you could be looking at a future PE higher than the 20 we use, which means Republic would offer a much better investment, although not as safe an investment as Waste Management. The bottom line is that this industry will grow in the future. Waste Management's 5-year growth rate is only 8%, while Republic is set to grow at 16%. The numbers for this year are set at 12% and then 20.5% for 2011. While Republic has grown 1% slower than Waste Management in previous 5 years, it appears that the future will be quite different. We're going to get on the phone with the Investor Relations Department from each company and see if we can do some more digging. For now, it looks like there's reason to own both of them. Waste Management for a solid dividend and Republic for the projected growth possibilities. So, the next time you throw away your trash, look outside to see who picks it up. For us in Winston-Salem, it's Waste Management truck that comes around to pick up the recycling every Wednesday. For Waste Management, the real growth may come from the energy from trash business that they have. It ties together our themes from yesterday and today. So take a look at both of these themes, and we'll throw in SRCL Inc., symbol SRCL, and Covanta Holdings Corp., symbol CVA, who both serve international markets for waste management space. You may want to have a portfolio of all of these. Certainly the markets outside the U.S. must present enormous opportunity for growth beyond the United States. We hope you enjoyed our trash talk today on Lunch at the Market. If you have issues that are pulling up over at your place, go ahead and mention us on Twitter, and we'll cover your dirty laundry on Lunch at the Market. Have a great day, and we'll see you tomorrow.